Yo, what's going on, everybody? How's it going? I hope everybody's having a productive Friday. I just wanted to get on here today to talk to you all about lending as a real estate investors. For some of you, you may be interested in wholesaling land, maybe interested in wholesaling houses, maybe interested in doing fix and flip, getting into the development space. I just kind of want to talk to you about a very important piece that I would start, trying to understand if I was you, especially if you are a beginner is private lending, right? Essentially, your lending option. So you know that there's hard money lenders, which typically they're going to be asset based. So a lot of hard money lenders, they're not going to look at your income or look at your credit. They're asset based, right? So the asset is the property that they're wanting the loan for. So they're going to look at the strength of the asset. You have your bank financing, which is pretty simple. If you have deposits in there, well, I'll get to that. But bank financing, and then there's private money. And private money is going to be a mixture of you, the borrower, and then obviously the asset. Okay, so I'm going to discuss private lending first, and why I believe like this is the kind of the best option. If you're looking to either get started or you're looking to scale. So the reason why I say this is because private money typically you're going to be able to do more projects, right? So meaning that let's say if you try to compare it to bank financing, let's say you have three projects going with Capital One Bank, right? And then you have three projects going with iFund Cities, okay? So if you go in, you have a good deal, right? You have another deal. Hey, I want to get this done. I want to get this closed, whether that's new construction or a flip. iFund Cities, they already have all your stuff on file. I'm sorry, my hat looks crooked. They already have all your stuff on file, right? So all they're gonna do is take a look at the deal. Okay, look at look at your bank statements again. Blah 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 blah. Fill out a new loan application. Probably one of you have to do that. They'll be able to deploy the capital for you, as opposed to banks. They may require you, since you have three projects out right now, they may require you to finish one and get it sold. And the reason that that can negatively affect your business is because the opportunity might pass itself depending on where you are in those other projects. So that's why diversifying your capital stack is going to help you scale as an investor, right? It doesn't matter if it doesn't matter if you've been doing business with this bank for years or whatever. It's always like if you put all your eggs in that one banking basket, what like just say what happens if that institution shuts down? Now you have to go find a different lender versus always be networking with other lenders, always be trying to diversify your capital stack. You need to be talking to multiple lenders all the time. If you can get ahead of the curve, you could talk to lenders like Kiavi, like Renovo, like Easy Street Capital, like RBI Lending, like Matador Lending, like Jet Lending. There's a lot of different options out there, iFund Cities included, um, that you need to start talking to now. Talking about other things other than rates, right? Talking about what the draw process is like. Um, are appraisals required? What's the seasoning period? Like all these are questions that you should be talking to the investor about. Asking them, do they fund off their own balance sheet? That's a great question for you to ask, a lender, to kind of get to know them, their closing process, how long draws take. When you are requesting a draw, like, do you require a physical inspection of work completed, or could you take pictures and upload it to a portal? These are the type of questions that you can kind of get to know different lenders, different processes, and whichever processes that you like, that you feel is going to be a bit quicker for you. um, Go ahead and start sending your information so they have that stuff on file early on, as opposed to, I got a deal working, let me go ahead and start sending the information. If they can have all your stuff on file, they'll have your schedule of REO. They'll have all your entity docs. They'll have a picture of your ID and a loan application on file. At that point, all you would need to do is maybe send updated bank statements to them when you have a deal that crosses the board. Because you have to think about it like this: In real estate, your lender is going to be your biggest partner. They fund between 70 to sometimes 92% of the project, right? So typically, let's just say for numbers sake, they're gonna fund 80%. You're coming with 20. They're your biggest partner. Lenders want you to succeed because 9 times out of 10, if you succeed for this project, you're going to do another project. So that means they can lend out more money, and it's a symbiotic relationship. You make money as the borrower, the lender makes money as the lender. Everybody's happy. Let's go ahead and go do it again. It's very important for you to understand the lending space, understand the right questions to ask, understand typically, lenders are going to want to see proof of funds. So, if they see that you have enough for the down payment, but you don't have anything liquid, you'll probably need to find a partner, somebody to partner with, or somebody to add, maybe add somebody to the LLC who has the funds, who can present the funds, because that's very important. And the reason why, it's not because they just want to see extra shit. It's like, okay, how are you going to pay for the upcoming payments? How are you going to make payments? These are interest only loans on what you draw, whether you're doing a renovation or you're doing a new construction project. Obviously, if you're getting into the DSCR, which is the long-term perm debt, the payments are going to be made through the rental, right? So, but they're like asking, like, how do you plan to make these payments? Because you have to understand they're taking on the most risk. They're taking on the most risk. So of course you're going to have to check all their boxes, maybe jump through some of their hoops. But so you're going to do that one time. That's all it's going to do. You're going to do it one time. And after that, like, it's just going to be easier for you. At that point, you just send in the HUD statement for the new deal that you just have, or send the purchase contract if you're a flipper, right? Fill out the new construction budget or new renovation budget. If you're building, I need the plans. I need your approved permits. A flipper, you just need to send them the purchase contract, the renovation budget, and your updated bank statements. I would get into the habit of running the comps and sending them the comps. That's why I have a comp sheet in Excel. Go ahead and just do that. Hey, here's the as is. This is the price that I'm buying it at. Kind of matches below market or at retail. And then here is the ARV for renovated properties within half a mile of my subject property, not crossing any major streets or highways. So it makes you look, so it speeds it up, but it's like, okay, this guy knows what he's doing. To the point where it's like, give him what he wants. It's like when you prepare yourself like that, like, here, you're sending in, here's the purchase. If you're flipping, here's the purchase and sale agreement. Here's the renovation budget. Here's the comps. You're setting yourself up to win. Ultimately, that's what you're doing. You're setting yourself up to win, because you're not going to be able to succeed in this business without a lender. And I honestly would prefer you to go the private lending route, because if you try bank financing, you'll probably have to have some deposits within that bank. They're more than likely going to limit you if you have multiple projects. They're going to probably want you to finish one and complete it and sell it first before they'll lend you more money. As opposed to doing private money, they may cap you at $5 million. Like, they have $5 million out with you. You want to see some projects completed before they can do. Think about what you can do with $5 million. How many projects a year you can do with $5 million? Like, it's just, that's how you have to think about it. Partnering is going to get you started. If you are good at finding real estate opportunities, whether it's wholesaling land or wholesaling houses, I would say if you have 20 liquid, $20,000 liquid, if you find an opportunity, I would say, hey, I'm looking to partner on this particular one. And there's a like when you're running your numbers, that's why I have the loan worksheet. You can run the numbers and see, okay, if I put 20,000, 30,000 into it, I buy for this price. What do the margins look like? And you split everything down the middle. That's how you start, because you killed two birds with one stone. You made some money on a project, first and foremost, and you learned. So let's say three. You made some money and you learned on the project and you gained experience in the lender's eyes. So if you partnered with somebody, y'all have an LLC that y'all created together, and y'all get the loan through the LLC, and they sign as a guarantor, is two signatures, and y'all complete the project. When you send them the address of that property, they're going to see that this was the owner, this LLC. You send them those entity docs, they're going to see you own 50% of it. Okay, cool. That's experience right there. And the reason why it's important is because the more experience you have, the more favorable the terms are going to be. And the terms meaning your origination points, your LTV, your LTC, and your interest rate. Though, like, they're going to be more favorable. So if you have no experience at all, you're looking to get your first one done, I would still go ahead and do it if you have the opportunity. But think about going from an 11 and a half, maybe 12% interest rate to now you're at 10 and a quarter because you have experience, or going from you're at 60 to maybe 65 loan to value. Now they're putting you at 75 instead of 3% on the points. Now you're sitting at 175. That makes a difference in your margins, your closing costs, the loan itself, your max monthly payments. It affects it all. So for you, you need to focus on, okay, gaining experience, gaining experience, gaining experience. Partnering up is the easiest way, the quickest way you're going to do it. Wholesale, build it up. Save the money, save the money, save the money. Obviously, you want to pay yourself for working, but put money back into your business, and then start a in real estate investment fund, like for yourself. Like, this is my money that I'm going to be funding my partnership, my projects with. And once you get up to $20,000, I would say, hey, at that point, you're ready to partner with somebody. You're ready to partner with somebody. So, and then it's another thing, in a private lending space, you're going to learn more as you talk to more lenders. You're going to start seeing nuance. Like, you're going to start talking to, let's say if you're talking to lenders, you talk to lenders for the past 3 months, right? And this is a way for you to stay hip to what's going on, and you can call bullshit when you go to these conferences, when you go to these meetings and stuff like that. You'll be able to call bullshit. If somebody's telling you, yeah, I'm getting 9, I'm getting 9 and a quarter right now, and you talk to the top hitters in the business, and the top hitters are going to be your Lima Ones, your Renovos, your Kiavis. Those are the top 3 big, and their best terms, their best rates or whatever is 10%. And somebody's telling you they're getting 9 and a quarter, they're getting this. You can be like, where, who, what shop? Did you close on that? Like, what deal are you working on right now that you have those terms? You can ask to see, can you send me a preliminary term sheet so I can kind of take a look at it? And this is just for you. Like, hey, I want to take a look at like what a term sheet looks like. You mind sending me one on a deal that you closed already? That's information. I mean, it's really priceless. It's priceless. Imagine you can wholesale. When you wholesale anything, a home or land, can you imagine having the ability to put some loan terms together for your end buyer, and they give you the opportunity to broker the loan? So not only did you wholesale them the land or wholesale them the house, now you're essentially brokering, helping them get the financing, because you've already created relationships with lenders. So you could potentially turn a $5,000 deal into a $9,000 deal, a $12,000 deal, depending on the broker point. I charge 1% broker point flat. It doesn't matter what the size of the deal is. I'm not trying to be greedy. I'm trying to build a long-term partnership or relationship with, my end buyers. So I'm not trying to just, get rich off of one deal with them. That's like, imagine adding that to your business. And on top of that, you're doing projects yourself. You're a one-stop shop. And you can do that if you understand lending. The understanding the market, how the market moves and the market works, and the comps in the area, uh, rehabs or like the new construction. That's nothing compared to understanding the lending and what drives the lending and being practical and realistic about the terms that you're going to get. You know, your closing cost, your max monthly drawn, the absorption rate in your market is important. Yes. Uh, I mean, your realtor fees, right? That's why you see a lot of builders, they have licenses, a lot of flippers, they have licenses, or their wife or husband has a license. So that way they can save themselves some money on the back end when they go and list the property. At that point, they're just paying a buyer's fee. They're not, the listing, uh, the listing fee goes to themselves, right? They don't count that. So I mean, it really is very important. And this is the stuff that you're not going to understand this if you're not calling these lenders. Even if you have to bullshit your way in the beginning. Hey, what's going on? I have this project here in Nashville, Tennessee. It's a flip project. Just kind of wanting to see what type of terms do you all do for fix and flip loans. You can say I'm inexperienced, or I've done 3 projects over the past 2 years, and then go from there. Let them talk, and just act like, okay, so what would this deal look like? Can you kind of give me a picture? Like, give them 3 bed, 2 bath, 1,500 square feet. I'm buying it for 185. I'm putting $30,000 into it. It should be worth about 290. What would those terms look like? Obviously, you want to have a decent credit, and for like for private money, you'll be able to get approved with, I would say, at minimum, I would want to go in with minimum 650. Ideally, you want to be at like 710, 720, but 650 you can go in there and get it done. Because at the end of the day, like they can fight to win your business, so your credit is not going to just kill it. Like, it's not, you can still get semi-favorable terms if you have decent credit, but your experience level's here. Now, if you don't have your experience level, but your credit is a 760, they'll find something. I promise you, they'll find a way to make it work. Easy Street Capital, for new construction, just released a program where, they'll finance a new construction deal if you have no experience. And a lot of lenders won't do that. A lot of lenders won't do that. There's some out there. Nexus does that. They're based in Austin, and Easy Street is based in Austin as well, but they do that. I'm telling you, all this information is out there for you. You just have to talk to multiple people. You have to really consume the information. You need to get on YouTube, follow these lenders, content, LinkedIn. Type in the big hitters. Type in Lima One. Type in Kiavi. Type in Renovo, and follow try to connect with everybody, because all you're going to see on your timeline all day is lending related stuff, real estate market related stuff. Interact with them, ask questions under those posts, and let them get familiar with you. Tell them what you're doing, what you aspire to be doing. And I mean, I'm telling you, it's really that simple. It's that simple. I just wanted to get on here. Like, I started cold calling early. I think around, I want to say like 9:10. I went 9:10 to about 3. I want to say, did I go till 3? I think like maybe 2:45. So I just kind of wanted to get on here, talk to you all, before I go step outside, take a walk, and get back on the phones. But I'm telling you, make sure that you're building relationships with lenders right now, not just when you need them. Build them right now. You can ask them, do y'all have any events coming up? Blah, 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 blah. Maybe, hey, I can set some events up for you out here. I can help, y'all have any loan officers, territory reps out here that I need to connect with. We can kind of set up meetups. I'm good at that, blah, 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 blah. Whatever you need to do to position yourself is what I'm saying. So it's 20 minutes, y'all. That's pretty much all I had. Just wanted to talk about the importance of lending. So I hope this helps. If you have any type of questions or anything like that, just go ahead, shoot me an email, comment on one of my videos, hit me up on socials, and we'll go from there. So let's go close some deals. And happy Friday.